Hi, Stephen Barrett here. I'm going to continue on with the series of videos on getting a mortgage. We've already done the video on central bank rules, so today I'm going to look at what are the bank's rules, what are the bank looking for in order to satisfy their requirements to get a mortgage.
So let's have a look at the bank mortgage rules. Every bank is different, but by and large they have the same criteria in place. First one, deposit. This is obvious, 100% mortgages are gone. You need 20% deposit if you're a first time buyer, it's less. We talked about that on the central bank rules video before. But you have to show them that you have your deposit. They want to see that. You also need to be able to show them that you can cover stamp duty costs, which is 1%. If it's over $1 million, you need 2%, plus other costs. So you've your solicitor fees, surveyor fees. So you're probably looking 2 to 3 grand, maybe a bit more, plus your stamp duty. The bank want to see that you have this money. If you're getting a gift from a parent, the banks want to see a declaration that it's a gift and it's not a loan, and that you don't have to pay it back. So that is something that is required. It is with the prices of property getting higher and higher, it's getting very difficult for people to get the deposit together, especially first time buyers. We're increasingly seeing parents gift their children some or all of the deposit amount. Ability to make repayments. This is the biggest problem that I see at the moment with people. A lot of people seem to think that if they have a high salary, that it's enough to satisfy the banks. But the bank want to see that you have an ability to repay your mortgage if the mortgage rates went up by 2%. Okay, so it's the current rate plus 2%, and the banks want to see that you can repay that. They want proof of it. So they want to see things like savings. They want to see regular savings going into an account on a regular pattern. They want to see current rent or mortgage that's paid, something that will be discontinued when you get your new mortgage. So I came across a case recently where the client was paying his landlord cash. The bank won't accept that. They want to see direct debits going out. Discontinued loans. So if you have a loan that you intend to pay off before you get your mortgage, that also counts as proof of ability to repay. But if you do pay it off early, like a few months beforehand, the bank want to see you saving that amount instead of spending it. Net disposable income. So after you pay off your debts, how much money do you have to live on? There's been stories of the Celtic Tiger, people having mortgages that are so big that once they have paid off their mortgage, they literally nothing to live on. So the banks want to avoid this. It's not very good press for them. They don't want people on Joe Duffy complaining that they're living on beans because they're paying the bank and paying off their debts. So they want to see people having a minimum amount. So money to live on after debts are paid. This is a rule of thumb. All banks are different. But for a single person, you're looking at having $1,300 per month after your debts are paid. If you are joint applicants, you're looking at about €2,050 per month after your debts are paid. If you have children, you're looking at add another €250 per month per child. So a couple with 2 kids, you should have 2,550 roughly to live on after your debts are paid. Regular spending patterns. So the bank want to see 12 months current account statements. They will go through these and they will look to see if there's any unpaid unpaid bills, it must be 12 months, not less. I do get cases people going, sure, it's only a week short. The bank will send it back. They want to see that you're living within your means. So again, they don't want to see unpaid bills. They don't want to see regularly going into overdraft. They want to see that you are saving. Again, that's proof that you're living within your means. No missed. If some banks they look at statements, if there's 2 missed payments, they'll just reject the application straight out. So credit cards and overdrafts, how do they treat them? You have to provide 6 months credit card statements with your application. They prefer to see you paying off the balance in full each month. Again, it's showing you're living within your means and you're not living on credit. Overdraft is seen as a loan, so it will reduce the amount you can get. My advice is just get rid of it, because it shows that you aren't living within your means if you're constantly going into overdraft. So they are the main criteria that the banks have in place at the moment. You need to satisfy them. The biggest one, as I said, is the ability to repay would be the biggest obstacle or biggest hurdle that people fall over. So make sure you have a good savings pattern in place, and keep on saving. I hope if you have any questions, you can drop me a line at stephen@bluewaterfp.ie. You can go on my website, www.bluewaterfp.ie, or you can give me a call on 01 485 3305. I hope to talk to you again soon. See you now. Bye.